All right, good evening, everyone. Welcome to our market overview. Just to prepare you for the week coming. Quick disclaimer: this is not financial advice. This is just a market overview to gauge the current market and give you a better understanding of how to approach things going into this week. All right, so first and foremost, I always like to start off on our weekly candle here. With our weekly candle here, obviously we had this huge pullback and then massive rally towards the end of the end of the day, or the end of the week rather, which kind of gives you that huge long wick that we had playing out here. But one thing I do want to point out is now we're in this weird little situation here where we've created a lower low or lower high and a lower low in the weekly on our weekly candle here. So aside from the structure of the candle, just its placement is quite interesting here. This is a smaller range that we've had for the last few weeks now. um, a small is putting it lightly, but we were in this range for a little bit, and we started to break below it. We did end up closing back into the range, and I was waiting to see how today, how it opened. And there is pullback now currently in the market, but opening kind of where we closed on Friday is somewhat of a good sign. So we'll go through that a little bit later on in the pathing. But as far as our weekly candle, nothing much really to say than other than we created a lower low here and a lower high, as well as we took out this range, which is indicative of a bearish sentiment. But I'm still not 100% like short the market just yet. Um, there's still there's a few more steps that need to really take place before we can feel fully bearish on the market. And we'll get to that uh, a little bit in the pathing, but more later on when we go through the sectors. Let's pull up our weekly our levels here. So as usual, all the levels will be posted at the end of the live. So you'll get all of the levels as well as our pivot points, our strong and weak. Just a quick reminder: the strong pivotal point and the weak pivotal point is more of it's a way to gauge the week's price action. Uh, Typically, we close above the strong pivotal point will indicate a more bullish sentiment, and below the weak pivotal point will be more of a bearish sentiment. And I do indicate that in the message that I put out, so that way you guys can get it simply. All right, and then as far as our trends here, we did break out of our buying channel that we were watching building out here, slightly off here. We were watching for the last 2 weeks now. I wasn't here for the last live, but the live before that, we were talking about we're building out a buying channel here. Last week we broke below that, and this week we continued into that. So we are out of the bull trend currently on the as far as for the weekly, but we're gonna go into the lower time frames to see if there's any indicators of if there's any indicating factors that will help us understand if it's gonna be short-term bearish or it's actually a complete uh, a bear trend, right? So we haven't gotten there yet. One thing I do want to point out is we have a little bit of a blue channel here. It's just a buying channel that's been building out for weeks now. Um, we had broken out of it a while ago. We were looking at it on the daily time frame around the beginning of the year. Now looking at into the weekly time frame, it kind of fits better than it did when it was in the daily. So if you look back on our lives from at the beginning of January, you'll see that same trend playing out here. But I just want to be I just wanted to point out the channel building out here, because if we start to break below it, and follow into this pink channel here, which is just our selling pressure, we might see some more downside here. But I'll keep an eye on that, and I'll keep you guys updated as well in my ideas channel. Head over to the daily. With the daily chart, you'll see when I bring up QQQ, it's slightly different in the sense that on Thursday we had this huge pullback here. Yes, it shows more bearish sentiment with our green candle not being able to engulf the previous downtrend that we had. On the QQQ chart, we'll go to in a minute, but you'll see that it didn't even get past the 50% recovery of Thursday's movement, um, as opposed to SPY, which had some attempts to break through here. And then I wanted to pull up our simple moving averages, not your EMAs, simple moving averages. And I'm just looking at it on the daily chart because I just want to get a grip of what the average price on the daily time frame is, right? And one thing I did notice here is that our 50 SMA, right? So we had a breakdown at the beginning of the year where the 20 started to go underneath our 50. So our 20 is our green and the 50 is our blue here. And we're currently hovering around the 5, which is just going to be our short-term trend. But our 50 is right there. And as you see, there was slight rejections here, more so recovery off of downtrend, off of the strong downtrend we were in for the last week into this week past. So now I want to see if we do have any stronger recovery, if we can start rejecting at the 50 SMA, which is around 598. A rejection here would be a stronger confirmation of a bearish sentiment. And one thing I also wanted to note is the interesting thing about the 50 and the 20 is, well, first and foremost, the 5-day is your short-term trend, right? It's the shortest trend that you have right now. So anything over it is just naturally a little bit more bullish than for the short term, right? One thing that is interesting is when we're sitting in price action between this level here, between our 20 and our 5, there tends to be a little bit of you would call it chop, but essentially what it's doing is building up some liquidity, building some volume in this area, for it to either decide to go up or down. Hence why I pointed out the 50 SMA being right in the center point of those two simple moving averages, right? So obviously if you start closing over the 5, it's short-term bullish, right? If we start closing over the 20 here, it's going to be, a recovery out of our bear trend. I'm not saying that may happen this week. I do want to just keep your eyes out on the 50 SMA. It's at 598. So I want to see if we do have some recovery here, especially with us opening back in the Friday's close. So we opened somewhere here, and I think we're falling down a little bit. But there's lower volume on a Sunday, so it's really gonna come down to tomorrow's price action to really have us get a better grip on what the market wants to do. But as far as us opening right near the highs of Friday, that's essentially pretty good. So yeah, I do want to see us test the 50 here. I'll go into the 1 hour, and then I'll go through a little bit more pathing to give you an idea of why I mentioned that. So let's go into the 1 hour here. Let's take out our volume bars. Add our levels back in. All right. So I went ahead and put a little box here. essentially the bottom of the box is our 5 SMA, and the top of our box is our 20 SMA, and then our 50 somewhere in the middle, right? So as far as pathing goes, there's a few things that can happen, and you'll see exactly what I mean in a second here, right? So if we do have a breakover, so I want to start seeing us close over 595 first and foremost. So we had some pushes above here, retest, we couldn't hold it, fell below, and even when we pushed up, there was little confidence, and it continued on the way down, right? Here, as far as pathing, right? So if we're opening here, I want to see it if we can hold that 594 level into tomorrow, even if we break down a little bit into like the 593-ish area. So say we break down a little bit and then we have a strong opening tomorrow, we're gonna catch up to the 50. So the 50 is somewhere right here. Oh, somewhere right here, sorry. So if we do have a stronger push towards the open, we'll get that test that we were saying that we wanted. And our 599 here is gonna, it's been the struggle currently, so we do want to see us close over 599 to feel more bullish. As far as us break sitting in this range, I'm neutral bearish, but I'm not fully bearish until we start closing underneath until we start closing underneath 590 again, and especially 594 if we want to look for any further downside. But as far as pathing goes, looking to see if we can get that retest around our 50, which actually corresponds with our previous rejection area. So if we do have somewhat of a pullback here and consolidation inside of our 20, so our 20 moving SMA is going to be right here, and our 5 SMA is going to be somewhere right here. So if I see a little bit of a consolidation here taking place, what that really is going to help us identify is a head and shoulders here that's playing out. And if we start having closures, we finally break over that 599 and we test the 20 SMA and actually start to get price action above, we can look to see more recovery. This may not happen this week, but based on how we moved in the last hour of our day, on Friday we went up like $10. It's not out of the woods, but I do want to see if we can retest the 50 simple moving average, which is going to be right around here. So I would look to see if we do have some strong pushes in the open to see if how we react around the 598 597 area for the bullish pathing. And as far as our bearish pathing, let's zoom out a little bit here. All right. So as far as bearish pathing goes, it's sort of the same situation I'm looking at, right? Us open, there was two ways we could have opened today, right? So we could have opened either on a gap down, or we could have opened somewhere here or even lower, and chopped around until tomorrow's open, right? But we actually opened at Friday's range right here. And that gives me a little bit more, I would say, more confidence that we're gonna try to test the previous highs in the area. I'm not saying completely to go long. We can easily just drop off in the morning, but I like that we started here near this chop that we had for a few hours, right? These are hourly candles, so we had a chop around this range here. So opening here, there's enough support and volume in this smaller range here to hold price a little bit here. Of course, breaking below there, it's going to be, especially closing under 590, this would probably be my bigger indicator for any type of shorting. What I want to see is that retest one around the highs, right? Because this is where we retested. We even had a off the downtrend. We had a bounce, and failed to support around 599, and then we broke down further, right? Then we pushed up, tested 599 once again, and failed, right? And then our 50 SMA is sitting right around that area that we're failing to break above, which is 599, 600 level. So a better bearish pathing and confirmations would be one, break as we're opening at the Friday's open, right? We have not opened below. A retest of our 50 SMA, and then having a further rejection around there, coming back around here to create a little bit of a consolidation zone before we break straight through to 590, because we do have some news coming out this week, so I don't think it's going to happen right away. We might play around in this level for a little bit. We also have a little bit of a thin structure here, so we may not have that strong failure right off the gate, but we can look towards the retest of our 50 here and utilize that as that rejection zone, right? So we have the rejection here, and out of our box, our little box here, I wrote between our SMAs and between our 5 SMA and our 20 SMA. So we'll just go 595 just on to be on the safe side. Looking to see our rejection around the 598 level, and then once we start having closures under 595, you can expect a little rejection here, and we might hover around this area for some time, right? So we may not get the 590 break right away. Reason I say we look for the 595 is because our 5 SMA will be right there. Try not to use SMAs too much, but the fact that they're so close together, it gives you a little bit more confidence on what the average price movement looks like. So I'm just going to be focusing mainly on my levels, but I do want to see us react to the 50, which is going to be around the 598 level. So that's probably going to be the biggest thing you can look forward to this week, is trying to see how we react to the 598 level. So a rejection here would lead to a little bit of a consolidation before we start flushing towards the 585. That would probably be more towards the middle of the week, and then we would have more news towards the end of the week. Thursday, Friday, there's more news coming out, and then failures at that 584 would give us further confirmation for it to go down. But your major thing is going to be looking at our pivotal points here: failures at 595, failures at 590, and then 100% on the 584, right? So let's see how that plays out. I really want to just, emphasize once again that 50 SMA is right there. So that's my main thing right now. I will go through that tomorrow. Whenever I get home, I'll go through it and just watch the charts with you guys. I may have to update later in the week based on how the price action goes, but because we may test the 50 tomorrow, and then all of the pathing that I have today may not exactly work out, right? But our levels are still going to be valid. So let's work towards that tomorrow, depending on how the price action moves. All right. And then that's pretty much it for pathing wise. I would really look to see our ranges here around the 606 is our high, and our low is 581. In our expected range, I use an option straddle technique to kind of get that range, basically just to see where most of the volume is in our options, right? So this is where we're sitting at our out of the money contracts are around this area. So price tends to gravitate to one or the other depending on how price action is going to be moving throughout the week. And now let's move over to our QQQ. First and foremost, once again, we're going to start at the weekly here. With the weekly, it's the same situation as what we have on SPY, where we're creating a lower low, a lower high, and a lower low, breaking out of our weekly range here. We actually looked below, but we ended up closing back into the range. Once again, just like SPY, one thing I do want to know as well is here. If you notice on our weekly, right, we had a huge downtrend, right, and we stopped right near our previous all-time highs. So this is where I'm leaning, not completely bearish just yet, right? It's the trend is bearish, but I'm not short the market right away. And this is why, right? So we had that little bounce around the previous all-time highs, um, which is sort of a good sign. So I do want to see if we start failing around that area. I think it's 597 ish. I'll give you the exact number a little bit later on. But it was interesting to see us have this pullback out of our weekly uptrend here, have a pullback and test our previous all-time highs, and actually support with some strength, right? It pushed up quite a bit, at least SPY did, right? And wanted to mention one thing as far as price action. I know it's a white screen, did it on purpose. So quick, I guess, sort of smaller lesson for you guys, right? If we have a price action that's moving up here and it has a little bit of a pullback and it starts to move its way back up, what do you look at for either upside or downside? So for upside, obviously you want to see us break the previous highs, right? And with confidence over it, you might break up a little bit higher. Similarly, on the downside, green is support, red is resistance. You want to see, even if we bounce off of this area, and once we start to fail underneath, we'll feel more comfortable with us breaking down underneath the range. Let's, how do I go back? There we go. All right. So, right, we have QQQ making a huge weekly uptrend, huge pullback here, and then we have a push up higher. And now we're starting to come down again. So if you, and the same situation, we have the inverse here. So now we're looking for, obviously, to break over our all-time highs currently, for any new highs. But we also want to see us break out of that previous struggle range that we had right here, right? Where we had that pullback and then it finally broke over our weekly resistance, and we had the pushes up all the way up. And what makes this different from just pushing up, slight pullbacks, and then go up? Because that's essentially what this uptrend is, right? It's smaller pullbacks. But on the weekly time frame, we have this nice deeper pullback off of the previous all-time highs, right? So we have price action that looks similar like a zigzag here, and then it has a deeper pullback, and then it pushes up, right? It's gonna struggle here at the previous resistance. So that's where we're at right now. So this is our strong area of support on the weekly time frame. So if we want to see confirmations for further downside on QQQ and, you know, at least the tech side of the market, do you want to see us starting to really fail this area here? And how does a failure at that level really look like? So a failure at this level kind of looks more like a look below, start to break above, and then it fails, right? So it creates a little bit of a head and shoulders pattern. So I'm going to be looking out to see if that plays out. I'll show you the pathing as far as that. But just wanted you guys to be mindful of like kind of how price action works, right? So you always, if you're going to look for any upside, you want to see the resistance break, right? So the same thing goes with the downside. So on our long uptrend that we had previous, we want to start seeing us fail at that area, which is here. So we want to start seeing failures underneath 500, the 502 level, stronger failures to bring us further down out of the trend, right? So then we'll know that we fully broke the weekly uptrend. Then let's go to our fibs here. And this I mentioned like a few lives now. Just something I was looking at is our fib on the uptrend, right? So we have our weekly uptrend, and we had a pullback near the beginning of the year, and we also had pullbacks towards the Christmas time we were going over as well. And I had pointed out our 50% retracement on the uptrend here. So on Friday's close, though we looked below it, we did end up closing above the 50 and also bouncing off that area of resistance at our previous all-time highs. So until we start seeing failures here at the 597, 598 level, 498, 497 level, I wouldn't lean completely bearish just yet, right? It it may still be bearish, a week or two from now, but it's for now. I'm not seeing any stronger signs of it failing the trend. We're still holding the weekly uptrend. We just have a pullback off of the current trend, and it's still supporting over our previous all-time highs. And I think that's it. And then as far as the trends and channels, I'll always go through that with you guys in the channel here. So let's go through our daily chart. And this is what I was talking about earlier with QQQ. All right, so I have the fib here, but let's bring it down a little bit here. Right, so we have this uptrend, the previous downtrend on Thursday into the low of Friday. Our pushes up on Friday, if you look at the chart, let's delete it for a second. Look at the chart compared to SPY, where SPY was kind of pushing up and almost filling that entire downtrend on Thursday. You see here, QQQ did not even fill half of that, right? We didn't even get a 50% retracement. So price didn't even make its way 50% of the way back up towards where it started when it dropped. Started when it dropped, right? And our downtrend here that we have on QQQ week, our daily downtrend, we have a stronger downtrend channel here building out for quite some time now. A few days now it's building out. So I do want to see the closure over the 50%. So we're sitting at it currently at open. So I want to see us retest out of this. So we may have a little break out of our selling channel, which is not going to give us that confirmation to go long just yet. And that's the reason that I pointed out the channel in the first place, right? So over here we have the retest and rejection, and then over here it's supporting off the channel. So we want to obviously see it break through the channel for further downside. And breaking out of this channel, it stops the selling pressure, but it doesn't invalidate the downtrend just yet. And that's what I want to look for this week. I want to see us retest. Last week we were looking for a further pullback around the 414 level, or even a deeper pullback around here and then start to come up, or even deeper pullback here, reject around here and push down. We didn't get that, right? We didn't even get to our 521 level that I was mentioning last week as far as pathing. So if we do break out of this selling channel here that we have, I still don't feel comfortable with us saying that it's going to be a huge uptrend yet until we start having closures over our 514 level. So why I say that is, let's go to the hourly so I can go through pathing here. So as far as pathing here, this is what I was mentioning with why I was saying that we're going to need to see if we start closing above the 414 level. So I have here, Where's the green? All right, there we go. All right, so we have. I have a channel here building out. I had building out before, right? So this is what I was looking for on Friday. This is essentially what I had. What I've been looking for to short the market was we had the huge downtrend, and then a smaller flag building out here. So I was watching to see if we start breaking out of it, and then we did, and that's kind of where I led further confirmation later into the day of shorting, especially when we broke underneath our pivotal point here. But the reason that I'm drawing this out, right, our little small bear flag here is I want to see if we do have some pushes up here, if we can start to retest around this area, right? Retest here if we had a struggle here for a little bit, so it might chop around for a little bit, or it might just go up, stronger rejection and straight down. And what we're looking for is to see if we do have a push up and a slight pullback here, if it will create that inverse head and shoulders for us to actually get the closer over the highs. So I'm going to keep a watch out for that, and that's why I'm saying the 514 level is going to be interesting, because I want to see us start to close above it or even retest, right? So even a retest and rejection of it still is not going to be that indicator for going short, as we still have this we're still within that channel, right? Because we broke out of it and we're back into it. So I want to see if we start building out that head and shoulders pattern as far as our pathing for it. I know that I just looked and I see a smiley face there. That's funny. So I want to see us retest around here, because this is going to be important. How we had slight chop around here. We had a look below, look above, look below, look above, and we're just kind of struggling here before we had that strong selling pressure to push us down. So I want to see what happens when we get here, right? Whether we start breaking above it or have a slight rejection, and buyers are stepping in around this area that we're at, around the 508, 509 level, and to maintain price action, so that we can see if it will get that chop to break above that 514 to build further liquidity and further volume in this area to push us forward, or vice versa, right? If it starts to fail and there's enough chop around this area to push us down, that's when you'll see stronger pushes down, and similarly a stronger push up. So seeing if we can retest this 514 area here is going to be important, whether it is that in the inverse head and shoulders that's playing out, or if as far as pathing goes, even if we have a push here opening, right, because we opened at Friday's range, if we do have some sort of a rally and retest around here, or even if we retest around the lower bounds of that chop area and then start to reject, I would feel more comfortable with shorting underneath 505, because then I'll know that the trend, the inverse head and shoulders will have failed to play out here, especially with stronger rejections there and breaking out underneath our 508 level, our previous highs, and starting to close underneath 505. So I'll be looking out for that. I'm going to go through the pathing a little bit more intraday, because I want to see how overnight plays out. So I don't want to go through too much about price action. I'm going to do more so just point out some things that I see in the market. And then IWM here. IWM has just been taking a beating for quite some time now. Funny thing about IWM is, let's go to the weekly first, starting off. All right, as far as the weekly, we're in the strong downtrend, even on a bounce here. All right, we're on a strong bounce, a strong downtrend here. Even on a bounce here, we're still having the continued pathing going down, right? Where we had our 50% here line drawn out. I don't have it anymore because we rejected it multiple times week after week. But we had our 50% that we were looking at a few weeks ago, just to see if we start closing over that 531 level, and then holding our 527 area, which is right here where we had the previous rejections off of the highs and supports. So again, that both of those things have confirmed towards the downside here. And once again, we're just creating lower lows, and lower lows and lower highs in the whole weekly trend structure here, especially in our daily chart here. We're just creating lower lows out of the highs. Are not even able to get over the 50%. So our small cap market is getting a little bit of a beating here right now. Where is my SMA? There it is. Okay. So looking at my notes here. So I'm trying to remember there was something very interesting. So, and here we are, right? So we're at our 200 SMA. We actually started to close underneath that this week, which is kind of crazy to me. With all of the other tickers like SPY and QQQ having like highs not too long ago, and creating all-time highs, we have IWM testing its 200 SMA, which is our average for the last 200 days. It's already testing that, and we're underneath that. So I just want to see if we do have if we have any pushes up, which will help SPY, and obviously QQQ is going to help SPY even further. And if it gives us that up, the push up that I was looking for, to see if we can start retesting the levels on our SPY and QQQ. But interestingly, on IWM, we're going to be having a push up to test our 200. So a rejection over 200 here would be a very sharp rejection, right? So I'm very interested to see if we have any pushes up this week. Going into Monday, going into Tuesday, just a slight recovery, and I really want to see us test that 219 level at the 200 SMA, because a stronger rejection here is going to definitely SPY is definitely going to feel that flush. So not to say short as soon as we get there, but I want to see what happens there, right? So we had a break below for a little bit here, and we didn't really test it per se. We just had a recovery out of the strong downtrend. So I do want to see this week, if that's my major thing. I just want to see us retest the 518, 519 level, and see if there's further rejections around that area. It's kind of the midpoint of our previous range over the summer, or the lower end of our summer's range. So I kind of want to see us reject here, and that would give us, let's draw this out, right? So this is our summer's range. Our 200 is here, right, towards the bottom end of that range here. So if we start rejecting around here, then we can start to look towards our previous lower bound range, because we did identify an upper range here and a lower range here. It's not showing it as much on the daily chart as far as the hourly, like how we had in our previous lives, but let's draw it out a little bit further to kind of give you a cleaner look, right? So we had our range here above and below, and this is our summer's range. So having closures under here, these are several weeks of price action, and starting to reject that area is going to be a very steep move on the downside. So I'm curious to see how it plays out, because then we have our lower bounds of our range around 209 area. So I do want to see how we play around that area, if we do reject around the 200 SMA. And that's kind of like the major thing for this week. Look for a break under for 209, just to see, and any rejections at 219. So if we start closing over 219, we could see a little bit more upside, but I wouldn't say that we're going to break above and go all the way through the roof. So that's one thing I'm just going to be looking out for, is mainly our SMAs, because they're all crunched together right now. For a while they've been spread out, with a lot of momentum. Usually our moving averages will be spread out because of positive momentum. We've kind of been chopping in a range for weeks now on all of our major indices. So our SMAs have been starting to group up very closely. So I want to see how we react around here. Nothing else too much to say as far as IWM's pathing. If I do have anything coming to mind, I'll definitely point out later on in the day tomorrow. Then let's just go through our market overalls here. So one thing I noted was let's put our levels on here. So our TLT, our treasury bonds, this week had a huge gap up, right? So we had a little bit. Let's look at the weekly because everything else doesn't matter. Um, we had huge downtrends for quite some time, right? Just pushes up, which is our yellow channels here are just recovery off of a downtrend. So we had some recoveries off of a downtrend every step of the way, smaller recoveries that led to further downside, right? Because until we break above here, it kind of acts as a bear flag. That's kind of how I have these channels played out. Similarly here, right? Just smaller bear flags essentially is kind of how the channels work out. And on Friday's close, we had some huge pushes up. Let's get rid of some of our EMAs here. All right, so we had some huge pushes up. And the one interesting thing about that is, so we have our treasury bonds, where our tech, or our usually inverse of SPY, right? So it makes sense, right? It's going up, SPY is starting to go down. But it also gives us kind of, I would say, a more insight into where the money in the market is going. So basically, what it's showing us is money is being taken out of our cash market, our short-term assets, and they're being put into long-term safer assets, which just adds to the risk-off mentality. And usually this takes place when we start seeing some failures in our tech industry, because tech is, it has this ability to have exponential growth. So it the difference between any other ticker, right? If we have, let's just put the chart here, right? So our tech will have huge movements like that, and then you have other indices, like let's say the financial index, right? It'll have slow, methodical movements up. Tech just goes up really fast and it goes down really fast. It has huge momentums both directions. And right now we're starting to see a pullback in our tech sector and money being put into our long-term assets, our safer assets. It's just interesting to see. I'm not saying that we're fully bearish yet on the entire market, but I do want to see if this uptrend is going to continue to be maintained. And if that's the case, then we may see even further pullbacks than we even expect in the market. Just a quick dun 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 moment there. And then as far as our semiconductors, these are just going to be, there's nothing really much going on here. We had for our daily here, let's look at the daily. It's just been chopping around our 249 level. Any other level is, later on in life. I really just look at these two levels. These are my major two levels. So closing over 250 is very good for NVIDIA and AMD and all of our semiconductors. And any rejections at the 245 level. So I'm curious to see if we have any pushes up and reject around that 245, 240 level. And then that would give us a more of an indicator if our semiconductors are having any positive momentum or not. So it's having a little bit of a push up. So I'll be taking a close look at our SMH to kind of see if we'll have some more strength over as far as our semiconductors, because I guess I'll just go through it right now with NVIDIA. I'm essentially just looking at this area right here around 129, 130 area. I put 129.25. I put that area, and that's just essentially my end all be all as far as the price action. I would look at Moen's levels, MHM. He'll post his levels in the morning as far as like scalping intraday or throughout the day. But as far as like an overall trend and whether you should hold or buy longer term contracts, I'm literally just looking at 129. So if it's over 129, I'm gonna go long, and if it's under 129, I'm gonna go short, and it's only a scalp. I'm not holding till next week, next 3 days, next month. It's just clean cut and dry. And that will help you look at the SMH to kind of use that as a guidance, whether you feel more comfortable going long on Nvidia, right? So if we have some pushes up towards the 129, 130 level, and you're worried like, hey, is it a good time to go long? You want to start seeing us close over the 245, 240 area on SMH, and then you'll feel a little bit more comfortable going in, getting your money, and taking out. Because I would not hold any longer. As far as semiconductors, that's like the one thing I'm just gonna point out as far as that. And then let's move on to our SPY sectors because I do have quite a bit to say. So our financial sector, this is where the interesting part is. So we have a huge pullback in the market, day after day for a whole week, and we have our financial sectors closing at our all-time high, in the financial sector, right? So our XLF is closing at all-time highs. So while QQQ is having a huge pullback, the small caps are having a huge pullback, SPY's having slight pullback and a little recovery. We have our financial sector just essentially carrying the market. And the reason I say carrying is because on any of these huge deeper pullbacks, especially when we're failing these weekly trends, you would hope to see like stronger downside day after day, day after day. But even on our bounces, week after week on SPY, our bounces on any pullback have been fairly high, right? So we had our Monday, we had our let's go Tuesday of last week. Let's go Tuesday of last week, which is this is that Tuesday. Okay, so our Tuesday of last week, right? So we do have some pushes down, and our recovery is not 100% recovery, but it's a pretty decent recovery. And even on the downside here, we have a push up. I don't want to pull out the fibs to like give you exact numbers because I don't want you guys to be trading off of like perfect 50%. Let's go over it. But just wanted to point out on any pushes down, we do have quite a bit of a push up for as far as recovery goes. And we can lend the hand to the financial sector here. And if we want to see like confirmation for further downside in the market, I would want to see our financial sector start to fail. Then I'll feel more comfortable saying that, hey, let's short the market. That's where I was saying that we're in a bear trend, but I'm not 100% just bearish just yet, right? And I don't mean that it's going to go up forever. I just mean that I'm looking closely at the financial sector, a sector that is 30% of SPY. So it's just as large as our tech sector in SPY, and it's having a push up. And SPY is, a good indicator of the general U.S. market. So if our financial sectors are going up and our tech is going down, we're having that little struggle in between. So having stronger confirmations with our financial sector failing and our tech sector failing, then I'll feel more comfortable with either, entertaining long-term shorts or whatever the case is, or just looking to just go straight short, right? So currently what I've been looking at is just our levels that I put out, and you'll see me, I'll get into a trade when it breaks my support and I'm out at the next support. I'm not wasting time hoping that it go down, because then any quick recovery, I'm going to get smoked. So I'm not even worrying about, I try not to even get to the point of worrying about that. And reason for that is just our financial sector. So I'm just riding the downtrend and I'm looking at my levels. I am not looking to force further downtrend when we have a huge sector that's making new highs and pushing up. So another major part of the market is doing well, and then the other half of the market is not doing well. So it kind of gives you that mixed signal. So that's the reason I'm bringing up the XLF. I just want to start seeing some more failures in the financial sector for me to feel more comfortable shorting the market at all. And this is what I mean by us, um, the tech sector going down, right? So tech is just down straight. Um, it's just a straight down trend that's happening here on our financial sector. Here's our yellow selling channel. So we just had a huge downtrend the whole time. Week after week, let's go to the weekly. Week after week, we were kind of looking at the tech sector, and we have our levels here. Just this past week that happened just kind of broke through every single support, and that is kind of where you see that huge pullback in the market is our tech sector. Just as fast as it goes up, it's just the similar way as fast as it goes down. But we still have our financial sector holding it up. So I want to start seeing if both the financial sector and our tech sector, which are equally, almost equally weighted as far as percentage goes in SPY. I wouldn't say volume wise. Obviously, tech is going to outdo it with the volume. But as far as the percentage wise, they're neck and neck. And to see financial sector being pushed down this deeply, um, pushed up this deeply, and our tech sector being pushed down like this, I want to. There's a disconnect there, and I want to see it play out a little bit more this week, especially with our news coming out. So I'm interested to see how our unemployment rates, our non-fact non-farm job payrolls are, so on and so forth. I'll be looking at that this week to see if it'll have any influence in our financial sector. When we have that pullback in the financial sector, it'll give us further confidence with our tech sector also falling behind, right? So that's why I always mention the news is very, very important, because you want to bring these things together to feel more comfortable trading the market. Because then you start seeing a pullback like we had on Friday, where it's a deeper pullback, and you may want to chase that trend, and you may not understand what else in the market is actually affecting what else is affecting the market. So we had that huge push down on Friday, and then our financial sector had this huge explosive moves in the afternoon, and then SPY shot straight up $10. So it's always worth noting our other sectors to kind of see what's playing the hand in price action right now. And let's go to our XLY. Yeah, our XLY. This is our consumer discretionaries. This is going to be your Amazon and your Tesla. I'm sure you saw the Amazon and the Tesla charts. They're kind of taking a little bit of a beating right now. And you may be wondering, hey, is there more downside? It's possible. But what I would be looking for is our XLY to start failing around the 216 area. Reason I say that is because we have this support here, right? We have these lower lows around 212 area, where we had to push this up and retesting, and that's kind of where we were on Friday. For our weekly wick. But if you notice here, we have just long green body. And the thing with long green bodies are, they're very weak structure. And what do I mean by that? Price just kind of went in one direction. We really need chops in the market, because what chops does is it allows the market to have an area to fall back on, right? So if we have a huge let's draw it properly here, right? So if we have a huge uptrend like this, that's just a non-stop uptrend, and then we have an uptrend that kind of looks like this. On any downtrend, you can just expect it to fall just straight down. On a pullback where we have smaller pullbacks in between, you can expect us to possibly stop here, bounce up, maybe go down towards this previous area here, bounce up. You have areas that you can look forward to, and that's essentially where we get our supports, right? So this is where I'm kind of looking to see our XLF is start to fill that 216 area, 212 to be more safe. And then we have this very thin structure building out here. It doesn't, it's essentially a fair value gap, but I just look at it as an area where there's minimal volume, right? And that's kind of what a fair value gap is. But it's just a better way to like rethink it, where there's lower volume in this area, in this range. So price is trading above and trading below, and everything in between just pulls price towards it, right? So either pulls price up or it pulls price down. You have buyer stepping in here, so buyer stepping down here and seller stepping in up here. Everything in between is just a smooth push either direction. So I do want to see us start to fill that 212 level, I would say, for more confidence, to see if we'll have further downside on our Tesla and our Amazon. I would feel more comfortable pushing more downside if I start seeing those failures. And then our XLP here. This is our consumer staples. These are basically, this is our defensive stocks. So this is what I was mentioning with our TLTs. It kind of goes hand in hand here. Our TLT is our treasury bond here that I was showing you guys had a huge push up. Our XLP has also been having a huge run up, right? So it's been having a run up for a little while now. But we had a huge pullback towards when we had those huge pushes back into SPY towards the end of the year. Usually, our consumer staples not tend to not do too well towards the end of the year, and our discretionaries tend to do more well because it's just consumer cyclicals like Amazon and I'm trying to think of a brand like Lowe's and Home Depot and all these companies that are doing well over the Christmas time, right? The reason I'm pointing it out is because our defensive sector is having a push up. Our TLT is having pushes up. These are both assets that are risk off mentality, meaning they are not with the tech sector growth, right? Tech is extremely risky. And that's why I was pointing out before, where we have the reason it's so risky is because it can just go up and down really hard. It goes in a quick succession. There's no stops along the way, and that's what's intriguing to investors, right? Because the greater the risk, the bigger the reward, right? So right now we're in the market where we have our defensive stocks. So these are our dividends. These are Coca-Cola, Walmart. I'm trying to think. Procter and Gamble, Pepsi, Colgate. All those safe companies that you know will always do well. Like everyone's gonna buy toothpaste. Coke owns every drink almost, right? Pepsi owns the other half of those drinks. So these companies are always gonna do well, and they also have high dividend. They're high dividend stocks. So just owning the stock, whether it goes up or down, pays you a portion of their earnings monthly, right? So if you start seeing stocks like this doing well, it just gives you a sign that the market is maybe feeling a little bit more cautious in where they're putting their money, especially when you start seeing TLT go up like this and our staples going up like this. So it gives you a little bit more, I would say, confidence in a downtrend that's happening right now. But we really want to watch to see our financial sector start to fail, to feel more comfortable saying that the downtrend is going to continue. But it's always good to just kind of look at everything here. And then our real estate sector, obviously it's going up quite a bit here. We looked at this like, I want to say 2 or 3 weeks ago. I was saying how we were rejecting around the 50% off of the push down. And since then we've pushed up on our weekly, and we've been holding this uptrend for a while. And that kind of goes hand in hand with our financial sector having this push up and sort of a bull flag playing out here on the weekly. So we really want to see if the financial sector is holding up here and we can get some type of rebound in tech, we might get that recovery that we're all like, looking for in the market. A lot of people feel a little more comfortable going long just because if you it's just easier to understand, right? The stock goes up, you make money. But when it goes down, yeah, you can make money on the way down, but the psychology is slightly different. So, watching our financial sector maintain its strength in on the upper end of the range is important here, and if it can hold that area for quite some time, and our tech sectors doesn't start to break down here, here's our 50% off of our tech sector push up here. If we start seeing failures underneath that 216 area, then we'll know that the weekly uptrend has failed. So we that's another thing you can be looking out to see if we do have a deeper pullback, right? Even if the market pulls back and our tech sector QQQ starts having that pullback, what happens around this 216? Do we have that rebound that we can look for in the market, with our financial sectors holding up the market, our tech sector having that nice bounce off of a strong area and pushing up, and then a huge rebound in the market? I'm not saying that's going to happen, but it's a good thing. It's a good way to just tie everything together. And the last thing before I close it off is just I'm going to go through Tesla here. Nothing too much to say on Tesla. I did note here is this is something that was kind of interesting here on Tesla. So our Tesla, just like I did, when we're at that 200 moving average, it hasn't been there on a push down like this in quite some time. We were using the 200 moving average as a rejection around like years ago, right? We haven't really caught up to it. Anytime we get to it, it's used as support on the upside. So I want to see just point blank, I just want to see us start to fail under the 200. Then I'll feel more comfortable shorting. Because right now with Tesla, yes, it's on a huge downtrend, and we'll look at our XLY and see that there's still a continued beating that's happening on our Tesla and all of its sectors. But I do want to see us reject underneath that 200, our 200 SMA, so our 200 moving average, because currently we tested it and we're still above it. So that's the only thing I'm going to be looking out for right now, because with Tesla, it can literally just shoot up $20 right away. And I just kind of want to see what happens here. And then our 5 SMA, our micro trend, you could say, our short-term trend rather, is right around the 300 area. So this is interesting with Tesla. So we can look at see if we start rejecting around that 300 level, or I'm breaking over that 300 level. But I still wouldn't look too much for like a huge run all the way up. I would just look for rejections little by little. Look for our areas. This is our weekly chart. On our daily, there'll be levels out. Moen gives the levels every day. And you may have levels as well. So I would be looking to see if we can start closing over 300. And, I would see green, take green as far as upside. And as far as downside, you do want to start seeing that failure underneath the 200, which is, I would say, more safe underneath 270. So Tesla's starting to fail 270. It can have some very strong downside, especially with 270, 275 here being the upper bounds here of our previous pushes up. It's kind of was a previous resistance, and it had that push of above it. So I want to see us starting to fail under the 200, and then also failing that area of previous resistance, and then you'll feel more comfortable with further downside. Because as far as it goes every day, yes, we're having a push down, but it easily gets that huge push up during the day, and it might scare you out. So further confirmations would definitely be a failure at the 200 area. And as far as Apple here, nothing too much to say about Apple. I would just look for if we start holding above here, this is our previous resistances before we had that break above. So I'm just using, these are my 2 major levels for now on. I used them earlier in the month to kind of get an indicator to go long. on Apple here. So I'm really just going to be looking at the same levels here, 234.15 and 246. So I would feel more comfortable going long above here and being more comfortable going short below here. We do have a buying channel building out here, but it also kind of looks like a bear flag still, right? So we still have not completely failed that yet, but we do have a buying channel that if you just look aside from the bear flag, we're just looking solely on the buying channel building up, which is just price action building up, right? It could also be creating like an ascending triangle here, but I'm mainly just looking to see us hold the buying channel here. So failures out of this buying channel, and especially closing underneath here, I can see further downside. As far as upside, like I said, over the 220, the 246, we do have a little resistance at 250 area, but it's a little bit more rewarding on an upside than it is for a downside, especially when we can have a push down here, look below a little bit, and then start shooting right back up. I would look more on upside, but not financial advice. I would just be looking at those two levels to see how price reacts around there. While it's still holding that buying channel, once it breaks out of that channel, we'll look this week coming to see if it breaks out of this daily buying channel, to feel more comfortable either on upside or downside. Sorry, let's lower this channel a little bit here, and then you can just kind of look at that later on if you want to rewatch the video to kind of see the channel building out. And that about wraps it up for me. Anybody have any other questions, concerns? I'm gonna go ahead and end the recording so